All right, I guess we should start now. Hello everyone, and welcome to the webinar dealing with supply chain challenges. Today, I will be your host. My name is Amy Danvers, and I'm a representative and product expert in GMDH Streamline. Alongside my colleague, Lucy, who is a supply chain specialist and a partner success manager. Philip, if I can ask you to change the slide, please, so that you can see all of our speakers. I'm also thrilled to introduce the speakers today, who are John Lowe, who has 30 years of experience in supply chain management and operations, change management and project management, resource development, and bottom line accountability. He's involved in advanced replenishment solution for 25 years. He has managed projects in 15 plus installations across many countries, as well as his partner, Philip Hall, who has immense experience implementing solutions of more than 30 years in logistics around the world. In Asia, he has led successful projects for supply chain improvements, warehousing, and warehouse automation with Zuling, Pharma, DKSH, and Jardine Transport using SAP and other applications. Currently, Director of Pre-Sales and Consulting for GenieX, based in Manila, Philippines. Now, just before we are done with the introductions, I would love to engage with our audience a little bit more. So please give us a shout out in the chat. Where are you connecting to us from? What kind of countries you are joining us from? The city that would be most welcome. So we can see India here. Again, India. Singapore, Jakarta, New Zealand, and even Sagar from India, Australia, India, again, India, and also Vietnam and Thailand. Well, thank you so much. New Zealand again, Saudi Arabia, and we see a lot of people from India. So thank you so much. That's good to know each and every one of you. And I hope you will find this information presented today most useful to you wherever you're located. And now my colleague Lou will explain how the webinar logistics will go.
Yeah, thank you, Amy, and welcome everyone to our webinar. So for today's webinar, in the following 45 minutes, we are going to talk about the challenges of the supply chain. During the webinar, please feel free to submit any questions, so we will find out the time to answer them together. And also during the webinar, we will have 2 polls questions. It will show on your screen, so you can just select one of the answers that you would like, so we can learn more about your thoughts and idea. Yeah, and also after the webinar, we will send out all of the materials and also the recording of the webinar. So you can, yeah, please feel free to share with your colleagues, and yeah, you can also review them. Yeah, next page, please. Okay, so from our internal study, actually, we conclude like there are 4 common supply chain planning challenges recently. They are highly variable market conditions, organizational disarray, outdated technology, and getting money back from your supply chain. So in the following time, we will talk about the details of them, like what is the situation, and also what kind of the solution we can support to solve these challenges. Okay, so now we're going to the first poll question. What is your greatest supply chain challenging? So you can already see the question on your screen, so you can just select one or even more that you think as you're facing, like in your daily work, which is your greatest supply chain planning challenging, like accurate demand forecast, automated replenishment, order plans, or responding to market unpredictability, compensating for organizations' errors, or getting money back from your supply chain. And also for the SOP, yeah, I think most of the companies were doing that. Yeah, so you can just select an answer on your screen, and then we will share about the answers of them. Yeah, I already see a lot of people type in our chat box, like SNOP. Yeah, the SOP is the sales and the operations. Yeah, so it's about like the business plan. So yeah, in the following time, we will also talk about the details about that. Yeah, I can see a lot of people are interested on the SNOP. Yeah, so I think you already have the chance to select the greatest supply chain planning challenges for you. Yeah, so if most of you have already selected the answers, then we can share the result with you soon. Okay, so I think now we already have the result of the core question. So we can see the greatest challenge, supply chain planning challenge is the responding to the market unpredictability. Yeah, for sure, this is one of the biggest challenges because we have the variable markets. And also a lot of people select the accurate demand forecasts and also SNOP. Okay, so luckily we will, all of this content and answers will be included in the following webinar. So we are going to talk about the details of them. Yeah, thank you so much. So we can move to the next, please. Yeah, so before we go dive into the challenges, please let me introduce Streamline a little bit. So Streamline is a global provider of the supply chain planning, predictive analytics, and the AI solutions since 2009. And so in the last more than 10 years, we already have like more than 300 of the clients out of the world, and our scenarios is quite flexible. So our clients actually including the retailers, distributors, and the manufacturers. And we also have a really strong partnership network around the world. So in 22 countries, we have more than 150 partners. So Philip and John is our really experienced certified partner. Yeah, and also you can see we have so many customers around the world, and mainly are the mid-sized companies. Yeah, so actually we are keep to help our customers to adjust to the unpredictability of the highly variable global market. Yeah, I think that's also one of your biggest challenge here. So next one, please. Okay, so now please let me invite one of our experts, Jumbo, to share his view on how the events of the recent years had proven that the business were left unprepared in light of global crisis. So talking about the Asia Pacific retail market in 2023, John, can you please tell us how do you see the apparent outcomes?
Sure, thanks very much, Lou. And welcome, fellow supply chain people. Always a great pleasure to sit down and talk to people in the same industry with the same interests as Philip and I have had for many, many years. And I guess today is a day we hope to be able to share some of our experience and some of our activities that we've been involved in across our career path. I think when you're in supply chain, you always have to expect the unexpected. I think supply chain is one of those areas where you need to be ready for and very quick to respond to changing conditions, either in the market or in economic conditions that will have impacts on the way we provide the materials, whether they be finished goods or raw materials, to be able to fulfill our sales or our manufacturing needs. And there's one thing I've learned in all of my years here is if you, in this supply chain business, you're going to have to expect change, because that's what we're here to do, isn't it? We're here to be able to make sure our business does not suffer to any great degree as a result of changes in the supply mix of our products. Now, having said that, and having had my background of where I certainly learned the hard way in terms of how do I predict those changes and how do I respond to those changes, one, without causing my business to unnecessarily invest in inventory, or adversely, if they in fact don't have enough stock to meet their demands. Now, either of those two situations can be have quite significant impact on our business, obviously. However, we've just been through the pandemic, which really turned positively your supply chain upside down. It's a very, very short-term activity that we've probably never experienced before in our supply chain business or our supply chain career. And it happened so quickly. And then the impact of that really made us rethink in that period, how do we secure the products to meet our business needs? And a lot of instances, we didn't have the tools to be able to do that responsibly and quickly. In fact, we didn't have the cross-company distribution of data or collaboration methods which sales and operation planning offer to be able to share that decision across the company quickly and then respond accordingly. So some of the things that I think coming out of the COVID period has made us realise where our business needs to improve. And I see a lot of responses there regarding the forecast accuracy, sales and operation planning was one of them, etc. So how do we do that? How do we overcome the constraints? Well, I think we're going to go through that today. One of the things that I have noticed already coming out of the COVID period is the market's changing again. So if you think of when we're in the pandemic, very rapid change, very aggressive changes, things that really disrupted our whole supply chain activity. Now we're coming out of that period and business is starting to resume to normal. Now, what is normal, of course? Normal is, in the instance over here in the Philippines, and I'll use this as the example for our local market, where in the pandemic period, the malls basically shut down. There was nobody going to the mall because we weren't allowed to mix in crowds. So that caused quite a considerable problem to our normal business methods. And so instead of going to the mall, everybody turned to e-commerce. And now here we are, we're coming out of the pandemic and we're now returning to the normal, if you want to call it normal, where people are coming back into the mall, coming back in and doing their normal shopping in store. Now that's going to change our normal supply chain pattern when compared to the period throughout the pandemic. So if you think of your forecasting, if you had a forecasting tool, the highs and lows of that forecasting were very difficult to manage. Suddenly, we're now having to rethink our business again as we come back to the normal. And our normal forecasting methods are going to be the areas that we're going to be looking for accuracy and response. So, and then we have the obvious change. We're going back into our normal retail method. The e-commerce is dropping away. So as before, it was increasing quite considerably, got up to about 5 to 7% of the general revenue. Now it's back down again to the 1.52% of revenue. And that's causing another change in the supply chain channel. So what do we do to try and overcome these rapid changes or coming back to normal? Well, I think, Phil, if you go on to the next slide, we'll start to talk about that. So what we need to do in these periods of change and then coming back to what we consider relatively normal business is to rethink our business plan. We're going from one extreme to now another. As part of that rethinking, and we have to take into account the current economic conditions, which again have changed since the pandemic. So what we're seeing is rather high cost of money. Interest rates are increasing, prices are going up, considerable increasing in fuel and energy bills. And again, we have another change, which is the weather. Global warming is causing considerable changes to the weather patterns around the world. So we need to be able to think about how do we in fact manage that change? What impact is it going to do to our business? There's some of these things that we need to think about is, are our stores, the store mix, the store size, the demographics of our stores, are they the same? What is changing due to now another constraint, which is the cost of money, and therefore my consumers have less disposable income? It's forcing them to shop differently to what they did before. They're coming back into the store, which is great, but now their shopping pattern is changing. less money to spend. So instead of buying the large packs, they're trying to spread their money and have a potential to buy smaller packs and spread the money across a number of smaller packs to try and save that outgoing cost. So on top of all of that, then we have our lead time. If you think about our weather and the changes that are being impacted over the world, that's disrupting shipping and causing delays in the receival of product, we now need to consider variable lead times. Lead time is not just from the shipper to the DC. Your lead time has to be in fact, in relation to every step of that supply chain, from your shipper to the DC, from your DC to the store, store to store, DC to DC, in various regions will each have different lead times. How do we accommodate that? How do we build a strategy around accommodating for these variabilities in the supply chain? We have to take into consideration, obviously enough, the cost. Everything we do in supply chain is a cost. Everything we do is based on the movement of product, the purchase of product, the investment of inventory, which is a very significant amount of money to any business. How do we manage that investment? What's the best way of doing that? Phil, if you go to the next slide. So how does it work? Right? We need to understand the impacts external to our business that will hurt or upset or constrain or add volume to our business. So these days, with modern systems like Streamline, we can use AI to pull into our forecast in our business model the external influences such as weather, shipping constraints, etc., and build that into our supply chain planning. And that, therefore, is going to help us be more responsive and reactive to those impacts outside of our business. We can then take that information and, using Streamline, build forecasts at the item level, location level. That location could be store and or DC, and have an indication of the variabilities across our store network. Not every store sells the same. Not every store should have the same allocation or demand pattern. Not every store will, in fact, have the same category mix, product mix. They will vary depending upon the demographics and the size of the store. We need systems such as Streamline to be able to identify each of those forecasts and the variable forecasts, and then roll them up into a demand pattern or a PO to replenish each of those stores or each of those warehouses based on their different demographics and different forecast models. It's very important that forecast accuracy, because it had such a big impact on the costs and the way we move product through the supply chain. And we need to pick up the individual and unique item movements at each one of our locations where we store or move product. It's so important for our supply chain. It helps us manage that investment and balance out our inventory range and product mix. Make sure we meet the demand of our consumers in the regions where they are required and expected, and vary from region to region. And we can do that through our Streamline product. More importantly, once we do the forecasting, we now want to share that information across our business. We want to be able to share what the forecast impact is going to be and have inputs from other areas of a business. Typically, a lot of people work in silos and they only work with the information they have, and then it gets passed on to somebody else for another course of activity. Sales operation planning enables you to share your data across your business. Forecast, purchase models, inventory values, forecast accuracy, lead times, market information, promotional modeling. I'm having a promotion. How do I impact that promotion on the forecast? I can provide an uplift to the forecast, and then I can then do a model on what the expected cost of that forecast would be in inventory in each of the locations that I'm actually doing a forecast. So those sort of areas, when you think about where we were in the pandemic, coming back into what we think is changing back to the normal, but the normal is still being impacted by variable market conditions. Those conditions are now more based on economic and changing weather patterns, etc., that impacts our supply chain. So there's no doubt about it, as I said earlier, supply chain, you need to be managing change all the time. You need to be on top of change all the time. You need to be supported by systems such as Streamline that can help you identify those changes and then be responsive before it happens and not after necessarily that it happens. Next slide, Phil.
Okay, thanks for that, John. We talked a lot about what things can do. Let's have a look at the system itself. And so what you can see here is the screen typically that we would see in Streamline for our demand planning. And so here at the top in the table we have here, we can see our actual sales, usually going back about 2 years. And from that, the system will use an AI modeling in order to create a forecast looking forward, generally over the next 12 months. And so this second line with the numbers in red here is our forecast going forwards. One of the things that we can do here is we can actually override that forecast. So in this yellow boxes here, if we wanted to change the forecast, we could actually amend those numbers, and then that will ripple through the product, and we'll see a different version of the figures that come out of it. We can also add, as it shows at the top here, different forecast versions. So we could have a version based on our standard forecast. We could then have a marketing plan that comes in for promotions, or we could have a pessimistic version, an optimistic version. So we can bring all of those things in. And so the system will work on our actual sales, and it will use a series of models that we can see down here. You know, we have a seasonal and trend-based model. We have linear. We can have a constant level. We have intermittent, pre-order, which means orders specifically, and we can have mixtures of things. And what the system will do for us is it will actually calculate all of those possible models, and then mathematically it will assess which is the best fit compared to the historical sales, and then that's one it will use. But if we wanted to, we could actually override that and tell it to use a different model. And so on the graph at the bottom here, we see the gray line, which is our historical sales, and then the red line going forwards is our forecast, and the green line that we see here is our predicted stock levels. And so the stocks are based on the calculated values that will be there. So once our stocks fall below a particular level, then we will start to reorder. And the ordering can be based on min-max, it can be based on a 1 month of sales. It will take into account the safety stock that we want to have. It will take into account the lead time, and also any batch sizes that the supplier puts on us as constraints. And so taking all of these into account, then what the system will do is it will calculate an ordering plan, which we can see here, and also then that will reflect in the projected inventory levels for the system. And all of this is seen not just in a quantity, but also we have a value base on here as well. So there's a lot of information that we can see on the screen in terms of this. And if we were to change any of these, then they will be reflected immediately in the system. Now, the other thing that we can do is we can go to the second tab, the inventory tab. Oh, just dropped out. I think the system's gone to sleep on me while we were waiting for this to start. So let me just reload. So go back into here. If I click on our inventory tab now, then we can see that we have by product, We have different product categories we can have in there. We can have different locations by territory, by warehouse, regions. So a lot of flexible information that we can have there in the system. And we can also then, against that, we can see information about available stock. We can have number of days supply. We can have stock that is due to be shipped out from a warehouse to the shops or to other warehouses. We have our lead time, order cycling. We have our lot sizes, pricing. We have our safety stock. And as well as that, we also see any current orders that are there and future orders, and we can see what our stock positions will be month on month. So a lot of information that we have against all of our products here. We can apply filters onto this so that we can look at this. So the system gives us a lot of flexibility looking at our sales and our forecast, looking at our inventory. And within the system, we can have different planners looking at different groups of products. And we have the security to be able to limit people in that way so that we can also select on that. So the other third area that I'll just go into here is the reporting. And just quickly show you, we have a lot of standard reports within the system. So here we have a list of, we have demand forecasts. We can view on our forecast performance, how it's looking against the model, plan versus actual sales, our ordering plan, projected revenue, and historical revenue, overstock, stockouts. So we can see all of those things. And all of these reports we can export as well into Excel, and we can share those with other people not in the system. So a whole range of things that we have. And the final item that we have is we have our dashboards. And so here we can see graphically a picture of how we're doing, in this case, from the start of when we were running the system, the month on month, what is our inventory value, our overstock value, stockouts, our turnover. So we have all of this information that's available in the system.
Phil, sorry, Phil, that information can also be broken down from a location level up to corporate level, is that correct?
That's correct. So I would go back into here. So when we look at the list here, then we can select the sequence in which we're going to look at it. So here we're going by item, location, channel, but we can change the sequence in which those appear. So we could look at by location, channel, item. So in this case, we go by our location and then the warehouse and then the channel within that and products within that. So we can change the sequence in which we can look at it. We can have multiple levels of product categories and also location bases.
The good thing is, I think, when those people are interested in sales and operation planning, is as Phil has just displayed it here, you can display this across your company and you can talk through changes in the collaborative group to determine the forecast mix with inputs now coming from merchandising or marketing about activities that may not even be included in the forecast. The good thing about Streamline is you can do that in a simulation program based on the inputs that's provided. So the user could basically take that input, override the forecast to adjust for any uplift, and then show the result to the group. So the group can then make a collaborative decision about which is the best model to go forward with.
Yeah, and we'll talk about that and again in a little bit, John.
Yeah, I understand, but I think whilst we have the interest on sales and operation planning, it's a good screen to show them how we can use that.
Yeah, okay.
So thanks. Thanks.
Okay. Yeah, thank you so much, John and Philip. I think it's a really good elaboration. So yeah, we can see when we're facing the highly variable market conditions, like when we're using the AI solutions or the dynamic simulations, this kind of the high-tech will help a lot, help us to generate and change the forecast, and also like creates the replenishment order automatically in a very efficient way. Yeah, so thank you so much for that challenge. And now let's talk about the organizational disarray. So John, can you please give us the examples of the post-crisis strategies go wrong, and what would be the better approach that you can recommend to our attendees?
Certainly can, yeah, thanks, Luke. So I think, excuse me. So what normally happens when you come out of a difficult period of change or high disruption is sometimes our planning becomes a little overambitious, I guess. And we start to plan based on the various impacts that are happening to our business, whether they're generating more sales in areas we've not been used to, or maybe the sales have dropped in other areas that normally are high sales. So those sort of variables, we normally start to overreact to that response coming from the market, and start to plan quite ambitiously about where we need to be in the market, but looking at it more on a short-term basis, not in necessarily a long-term basis. So what typically happens is when you come out of that, your strategies need to be changed once more. You need to come back and start to rethink how I can get my business back to the normal type of demand programs, taking into account what may have changed, so that when we rebuild our business, we're making a very sustainable approach to keep our businesses moving forward. I think some of the areas when we do ambitious plans, and certainly we think bigger than what we normally have done, we then end up having either a very large level of inventory holding in certain areas, certain categories, or typically we may end up in inventory availability that's not meeting the store sales. So they're variables that we need to be able to figure out how can we in fact overcome that particular problem, especially when we come out of a period of very high disruption. We need to then tone down maybe our forecasting very quickly, but we need to look at what areas are in fact impacting that particular forecast. So we can do that by building a more realistic plan so we can exercise and simulate the approach. The good thing about the Streamline product is we can do simulations so quickly that gives so much information across the company that we can make our decisions based on simulation. Try it, run it, doesn't fit the model, run it again until we get the best approach. We can do that by store, groups of stores. We can do it by various categories. We can run these models to be able to then replicate what we're looking for, and hopefully what we agree on is the best path forward. We can include into all of those simulations, as I said earlier, any promotional or external influence on the demand. We can add that in for a period of time so that we know that in that promotional period, this will be the impact on the availability of inventory. And then we can look at the forecast with the uplift and determine which stores need that promotional inventory. Because a lot of businesses, what I found in the past, there's been a lot of businesses in retail in particular, when they're doing promotions, run an allocation model. And the allocation model is fairly typically the same across nearly all stores. What does that do to our store? It means that our smaller store may get more inventory than what they need. And in fact, some of the larger stores don't get sufficient inventory. But if we model our business on history and we take into account the uplift of the promotion, we'll end up with a more accurate investment of inventory to meet the demand of our stores. We roll that up into the DC now, and so the DC should have sufficient stock in the DC prior to the promotion to meet the pull-out by the stores. So a lot of times when we start to do new strategies and we start to do different modeling to try and create sales or return our business back to the norm as the way it should be, we in fact lose track and lose sight of what stores require the inventory, what time or what period of time to meet the demand. At the same time, we need to make sure that we execute the replenishment system itself, the order that goes out. The good thing is we in Streamline can look at that advanced ordering. We can go out 12 months. So we can do our planning beyond our normal horizon of 1 or 2 months. We can go out 12 months. And as Phil showed you before on the forecast and the inventory model, it's very clear it can be done in units, can be done in value. And then that way we would hope to overcome the shortfall of inventory and the overstocking in our various locations, whether they be stores or DCs. So successful strategy is all about the planning side of it, looking ahead, being responsive, doing the model, select the model, and now make it operational. One of the things that we often struggle with, and in particular we struggle with this if we're using spreadsheets. Spreadsheets are good. They've been a very serviceable tool over many, many years. However, with products like Streamline, we can go beyond the spreadsheet methodology. If you look at this screen in front of us, we're talking about how we can do or how we can model our business based on a multi-echelon network. So we have multiple stores, we have one main DC, 2 DCs that is being fed by the main DC, and then each of the stores now being grouped around various DCs, whether they be regional or outer region, or whether they be in the province, out in the country, wherever they may be. So we now, based on our sales at the store level, we roll those sales up into Warehouse 1 to create a demand in Warehouse 1 for our major DC, which is going to be supplying Warehouse 1. And in fact, the same applies to Warehouse 2. The main thing of recognition here is that all of our activity is based around our store level sale, based on sales. So every time we look at a forecast, the forecast is a reflection of what the store forecast is to meet their sales. So it's not as though it's an average, it's actually using the real sales activity to roll up into a forecast. That forecast then gets converted into a replenishment model, which is in fact the store transfer request onto the main DC for Warehouse 1 and 2. From the DC, once the main DC transfers the inventory out to the various warehouses and the warehouses out to the stores, the main DC now creates a forecast for the items per vendor to be delivered to that warehouse, keeping in mind that that forecast and that purchase order is still based on the actual store sales. So we're trying to make sure we have a balanced approach for the inventory that goes into all of our DCs. It's balanced based on the stores that they are currently providing the product to. So we have a very nicely balanced product mix in the DC, product availability meeting the lead times, which is again very important. If you look at this example, lead time from vendor to the main DC, lead time from the main DC to the Warehouse 1 and 2, and then another lead time going out to store 1, 2, 3, and 4. If you think about it, each of those lead times will vary. Every time we vary the lead time or we add or delete a day, it impacts the level of inventory we need to retain that lead time. So if it's a 7-day lead time, typically you would cover it with 7 days inventory. If you have one lead time across all of that activity, you'll end up being short supplied at somewhere along the line if the lead time is insufficient, or if a lead time is excessive or has been overemphasized in terms of the time, you'll end up with inventory in excess of the need of that particular location. Because lead times play such a critical factor in our timely deliveries right throughout our supply chain, it's best to be able to provide accurate lead time so we can meet the variabilities of lead time by distribution channel. So we can do that. Phil, next slide down. More importantly, when we add new stores or add new DCs, we can then move that additional volume very quickly through our multi-echelon network to make sure our vendors also recognize through our POs that increasing demand. The good thing is we can also share our planned demand with our vendors. So if you want to go to an external collaboration, Streamline provides you the ability to maintain contact with your vendors through a collaborative format in sharing your plans for your supply from that vendor to the various locations. Phil, I think it's back to you again.
Okay, so what does that mean when we look at the system? Well, I mean, let's focus on a couple of areas here. We're talking about new stores, new warehouses, introducing new products. And so what the system allows us to do, obviously, if we bring in a new product, then that may be a replacement for an existing product. So we have the ability to set up rules for replacing an item. So we can say that item A is replaced by item X, and when is it going to be replaced? We have a date, and we can also have multipliers as well. So if we're thinking about this thing about replacing large packs with smaller packs, then we could have a multiplier that reduces the quantity, the comparison between them, but keeps the overall the same. If we're replacing something with a larger pack, then again, we can use the multiplier in there. And so this allows us to phase in new items and also phase out the older items that are there. So this is one area that we can do that. Let me just drop that. Other things that we can do is, obviously, if we're introducing a new store, then we're going to bring in products at that store. There may not be a forecast for that, so, or there's no sales history for that. So what we can do in the system is we can base those sales on previous history. So we can do that also at a category level. And so we can then spread that across to the new item and the new stores based on previous history. Or could even put in a manual forecast and say what we're going to do. And obviously when we have a new store, we may have a store opening and we may have a marketing plan that goes along with that. So we may want to put in extra product or special products that are there for that period of time. And so we can control that. We can always override these forecasts manually when it comes to that. So other things that we can do, we can change the forecast approach. We normally work from bottom up, so we do it all at item level and accumulator, but we can do it from top down. So where we have something new, we can apply the details of the categories across those new items. So we can work top down or top down for child nodes as an option in there. Some of the other things that we can do is that we can ignore zero sales or stock out days. So we can say that we treat these as exceptions and we don't include them in our pattern for the calculation. So we can have an override on that basis. And another area that we can change is we can have seasonality patterns. And so if we want to introduce a seasonality where one is not apparent at the moment in the forecast, then we can do that and we can spread across the months, and maybe for Christmas promotions or Easter promotions or any other holiday period where we want to introduce things like that, or maybe back to school is something that's just happening here in the Philippines. So for particular products, we want to increase our forecasts of that ahead of the go back to school period. So we can override our forecasts and things on that basis. So there's lots of ways that we can influence the model, and so we can make it reflect much more what we're trying to do. So these are a number of very important ways to do that. If we go in and look at our inventory, then what it shows us on our inventory table is we can see what our stock levels are, we know what our on hand is, and we can see when our orders are. But we also, from this button here, we can see these are orders that are already in process. So orders that we are due to receive, what's the due date, what's the quantity, and these are all purchase orders. We can also have orders due to ship. So these could be out from the DC to other warehouses, could be from a warehouse to the store. So we have visibility of these, and we can override this data as well. We can create new orders if we want to. And then if we look at the other orders that the system is working on for us, so we have our planned orders screen here. And so we can see by supplier, by product, what we're going to order. So here's a quantity. We can see the value of that. We can see the expected order date, which is today, and when that order would be due with a 30-day lead time. So we can look at these information. Our planners can work on this, and our planners can approve these orders. And generally then those orders can be passed down into the ERP system or what other systems you're using to communicate with your vendors. So it could be you want to put a hold on some orders you want to release. So it gives you complete control of what's going on there. Now, one other area that is worth looking at here, we also have the ability to look at how we order, not just on our min-max or 1 month sales or 30-day sales, but also we can group things in containers or groups. And so when we're ordering from a particular vendor, we may want to make sure that we get full container loads. And so we can specify which products, and based on the dimensions of the products, how they fit into a container, so that when we place our order, we can optimize what we're receiving from that vendor, because we know what's going to fit into particular containers. And it's no point, or it's very expensive to send half full containers, but it's even more expensive when it's one container plus a bit extra. How do they deal with that? So that we can let the system make those decisions for us. And so that's a very important factor in there. So these are all the sort of things that we can do. If I just quickly look at on the settings here, you can see that we can organize our replenishment strategy on a periodic basis or min-max. We can have safety stock as a percentage of our service level, and also on X number of months of stock. So obviously by tuning these numbers is the way in which we can control the ordering of our products and the stock levels that are there. And we can have that in general on our inventory, and we can have it separately for our distribution center, because generally we're dealing with bigger bulk when we come to our DC. So those are some of the things that we can do. I would just also mention that we can also do intersite. And so not only can we have sales moving or stocks moving as on that chart that John showed us, but we can also go back. And if I go back into our slideshow, then you'll see that we can also have movements store to store. So where we have a surplus in one store, we don't necessarily have to move it all the way back to the warehouse or to the DC before it goes out again. We can actually transfer it from one store to another. And we can set up those sort of things to optimize the use of our stocks. So hopefully that gives you another view of the things we can do. Let's move on to the...
Yeah, thank you so much, Philip and John. It's kind of interesting to see just how much the right technology can benefit the supply chain process. So perhaps, Philip, you can also share with us how can introduction of the outdated approach and outdated technology can go wrong with the systems, and how this kind of implementation can not benefit, but do something worse for us, and how those systems are benefiting each other. And let's us be mindful of the time. We still have only 10 minutes left and a lot of material to cover.
Yeah, thanks, Amy. Yeah, let's quickly have a quick look at this. It used to be that you used to have systems and you had huge ERPs which covered all of the areas that you needed in an organization. But nowadays we've moved away from that, much more into best of breed. And so we tend to keep our ERP, but then we'll add on to that tools that are the best to do particular things. And so for forecasting, demand planning, tools like Streamline can be added and integrated into the tools that our organization has at its core. And that makes it very flexible. It makes it much easier to evolve, and obviously less expensive as well, because we're not replacing whole systems. We're leaving systems to do what they do best. And so this is a very important thing in the way organizations can move forwards. We don't have to move that dinosaur of a system. We can leave that where it is, and we can just add on things to that. And this best of breed concept is now well accepted. And this is a quote from Gartner as to how we can use that. And the main thing is adapting our life cycles for products that we're going to use, increasing the usability and flexibility, and improving the interaction between the suppliers, the customers, the whole of the supply chain. And integration is the key to it all. Now we use much more APIs. We can have systems in the cloud linking up to systems on premise, and there's no issues with doing all of that. It's really best of breed, horses for courses. Use the best things available at any point in time. And we have a lot of examples that we can provide, things like combining Streamline with SAP, being able to take the best out of all of those things, in which case SAP would do the sales, handling the inventory. We would take data into Streamline, we would create the forecasts, generate the POs, move them back into SAP so that they can be processed. And so it's a very good combination of the best products. And we do that because we have a lot of integration within the system. So we have a lot of standard interfaces where we can link to more than 18 different systems at the moment, not just ERPs, but things like Shopify and other cloud-based selling systems. And if it's not there already, we can develop it because we have standard SQL links into various databases. And if all else fails, we can still use spreadsheets. And so it allows us to link up to pretty much everything. But every month we're adding on new interactions as we spread our customer base and they're using new systems. So that integration is a very key thing. And you don't have to let your old ERP hold you back from taking on these new tools.
All right, so it seems that the best results for the supply chain can be produced from this kind of combination between the demand forecasting solution as well as the ERP system. So with the right forecasting technology, we can get the best out of the ERP system. And how would that be reflected in the returns of investment for such an implementation? Can you elaborate more on that, Philip?
Sure, Eddie. Well, and whenever we talk to people about implementing systems, whether it's Streamline or any system, in fact, I mean, the key point is ROI. It's how do you get back your investment and how quickly you can get back your investment. When we look at supply chain, it's actually easier than you think, because the supply chain is really tied up to your money, because you buy product, but then you only make your money back when you sell the product. And so everything in between is just your money tied up. So the shorter that is, and the faster you can turn over that product, the better and quicker you get money back. And so we look at things like this. First of all, removing or reducing lost sales. So stockouts, make sure you've got the right product in the right place. Not having overstocks, whether it's tied up in a store, whether it's tied up in a warehouse, whether it's stuck in a container somewhere, whatever it's doing, you're not selling it, therefore it's not making you anything. When you have to look at your net inventory, what is your total stock? And that means things that are in transit, things that are in a warehouse, things that are in a store. Huge amount of money is tied up on that. You only get that money back when you sell it. So those are all key things that we have to look at. We can look at average day stock. What's your total revenue compared to all of those things? So looking at those factors is how we can start to address this return on investment. So our target is reduce the stocks. It's to remove the out of stocks so that we know we're going to have product to sell. Reduce the amount of stock tied up all the way through the system, and therefore free up money. And so when we start to implement, what we want to look at is the KPIs for an organization. How do they measure those things? What are their targets? And how can we optimize those? Because that's how we can show them where they get their return on investment. So those are the key areas that we need to look at. And one example that we have in our libraries is a customer in LATAM, and they reckon they were saving about 120,000 a month after implementing Streamline, something like 1.44% of their 100 mil revenue. So if you look at that, that's almost like it's a saving over a year of 1 million on 100 million. And so the payback for that compared to the cost of the implementation is a matter of weeks. And they were looking at this as being a recurring thing, that it's not just a one-off, that they can do this year on year, that gives them that level of savings as they fine-tune the system. So these are the things that we need to look at. And if we get the chance to talk to you about your business, then this is how we'll start to look at this in order to think, how can we optimize the things that you do? How do you improve that return on investment? And some of the key areas here, reducing that holding cost, the inventory value. And it's not just that, because that ties up to insurance, because you have your stock insured. The higher your inventory value, the higher your insurance premiums are. If you can reduce your inventory, then you don't have to borrow so much money for the stock. You may even be able to reduce the size of your warehouse. You may reduce overtime of staff. It may also give you better negotiating power with your vendors, because you can now manage the orders better. You give them more advance notice of what they're going to do. So there's a ripple effect of some of these things leading into other areas. Some of the areas are not quite so quantifiable in terms of, when we look at the efficiency of the team, the planners, it's not quite so easy to quantify that. I mean, I would say that you never justify a project on reducing the headcount in terms of your planners and things like that, but you certainly buy time for them to do better things, to be able to work on sort of what ifs and new product launches and how you expand your network. Things that the planners ought to be doing, things that challenge them rather than just using Excel to crunch some numbers. So, these are all areas that we can look at, and we can go into specific on each individual organization so that we can look at the details of these, because obviously the way in which that payback comes is different for each organization, but we can fine tune that. So these are the sort of things that we would look at in order to help monetize your supply chain and improve your return on investment. So the last couple of things to look at. Let's just quickly go into the last of our examples. And excuse me a moment.
Sorry.
Let me turn off my video while I'm going through this. So we have, sorry about that, we have a dog. Looking on here, we have our money tree. And so we can see on the money tree on the left-hand side here, the green shows us our overstocks, the red shows us our stockouts. And so those are immediate views of where we can see an impact if we start doing something. We looked at our KPIs. I can go back into those. And so one of the things that we can do as we go through this is we can use what we call the time machine. And so time machine allows us to look forwards in time. And so in our example here, I can go forwards 60 days. And so against this, what I can do is move forward 60 days, and the system will show me what the impact is of doing that. And so I can see here, actually our inventory has increased, but our overstocks are down, our stockouts are down, our annual revenue is up, our gross margin is up. So a lot of very positive things that we're seeing out of that. And so we can make changes in the system, and then we can use Time Machine to help us go forwards and look at what the impact of that would be. I'm going to drop out of Time Machine now, and we'll just go back into our presentation. And hopefully you've got a good idea of some of the things that we can do in the system.
Yeah, thank you so much, Philip. That was quite insightful. Now, dear audience, I would like to address our second poll question to you, and that is related to the priority level of such improvements for your company. So please give it a couple of minutes to tell us if it's a top priority for you, which you would like to be resolved in the next 3 months, or you can wait about 6 months with the highest priority, or 9 to 12 months respectively. So give it a couple of minutes and please answer the simple question. We will be reviewing the answer in a minute. All right. I kindly encourage everyone to give their vote, and so we will be closing the poll very soon, and let's review the results. Yes. So the majority of you has mentioned that the moderate priority would be the option to go for, but the top priority and high priority have the second place, with 27% of the answers being the top. So good thing is we can help you out with that. And Philip, if we can have the next slide, please. As a conclusion for this session, I would love for us to review the next steps, the next possible steps, which you would like to consider. So as a lot of you mentioned, it would be a very important issue for you to resolve. The important question to think about would be, what kind of approach will you choose? Will you invest in a new tool set to get the better investments and KPI results for yourself? And if so, we can also offer to you the chance to explore Streamline a little bit further during the personalized session. And right now, our support team will show you the link. You can go through it and book a session with our experts here to have your own matters and issues resolved, have a personalized sessions, and explore how Streamline can benefit your supply chain. The session will be absolutely free. This is the compliments from our team. And I highly encourage you to go through with it and book your own session right now. Okay, and to finalize, I also encourage you to review a couple of articles you are seeing on the screen relating to how Streamline can benefits sales and operations process, since you mentioned that for a lot of you that would be a top priority and a very important question. And also to explore a little bit more on digital twins technology. This is what Philip was showing to us just about a couple of minutes ago with the Time Machine. So digital twins is the dynamic simulation that can peek forward in time. And with that, it's about it. Now, so we are ready to wrap up. We've went slightly above the time limit. But in any case, we're seeing your questions in the chat. And if that will be possible, we'll be reviewing them and getting back to you via email if possible. All right. As I mentioned before, we're seeing your questions. We will be getting back to you in time using email, just for the sake of not keeping you on the session any longer. So thank you everyone for your attention, for your kind questions, and for your interest. Thank you so much, Philip and John, for joining us and presenting this valuable information, which I
Amy.
hope will be useful for everyone here. Thank you again, Lou, for support and for our marketing team in the background. So we will be getting back to you very shortly and seeing how we can help your supply chain.
Thank you, everyone, for attending the webinar today.
All right, everyone, have a really nice rest of the day, and I hope to see you all very soon.